not broadcast. Broadcasting started, no, Sikandar?
Yes, sir. I think.
Yeah, it's okay.
Yes, yes.
It's okay. Yes, sir. It's visible, sir, clearly.
Still learning.
You have got so many learnings, sir, in this online scenario.
In any case, life is learning till burning.
Yes, absolutely. That's well said. So the session is already broadcasted. You can stop your screen sharing. You can start it later on once your session starts.
Now,
You have to
how do I do? Achha, okay, stop share.
stop share. Yes.
Okay.
Yes. Once we start your session, that time we can start sharing. Because we'll have a 5 to 7 minutes of time of introduction and all this stuff. The participants have started coming in. Yes. Shall we, Sikandar, Nilesh, shall we start?
Yes, sir.
Yes.
Welcome members to this 37th virtual CP meeting of Borivali Central CP Study Circle. Today we have learned faculties CS Surendra Kastia sir and CS Raj Kapadia sir on the topic of ROC compliance and amendments in company law. And before we start our session, as per our tradition, let's rise for the institute motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता
Thank you. As you all know that on the website and in our email and everywhere, we have mentioned that we were having a learned faculty CS Kaushik Jhaveri to be part of this meeting. So was supposed to be part of this meeting, but because of some medical emergency, uh, from his suggestion only, we requested CS Surendra sir to take up his session. And thanks very much to Surendra sir to accept our invitation at very last moment and and attending this particular VCM. And we are honored, sir, that you are here, and we are thankful to you for accepting our last moment invitation, and we are thankful to Raj also for accepting our invitation for this session. Now, before we start the sessions, I request our core committee member, CA Nilesh Vasa, to briefly introduce both the speakers, please.
Thank you. Thank you, Lalit. Thank you, Surendra sir, for accepting our invitation. Friends, I hope everyone is fit and fine. Today, as our faculty, we have Surendra Kanstia as our faculty for today's seminar. He is a BCom, LLB, FCS in a practicing company secretary. The first company secretary to hold the post membership qualification in competition law from the Institute of Company Secretaries of India. He is also a fellow of CUTS, that is Center for Competition, Investment and Economic Regulation. He has authored 6 books and reviewed 9 books. He has also contributed over 200 articles in leading journals like Chartered Secretary, Chartered Accountant, Management Accountant, Corporate Law Advisor, SEBI, Corporate Law. He has served Consumer Guidance Society of India as General Secretary, Vice Chairman and Chairman. He has also served the Governing Council of Consumer International and presently is a member of Steering Committee of International Network of Civil Society Organizations on Competitions. We have a very much expert and a talented speaker today on this topic. Welcome, sir, for VCSE. Welcome to you for this seminar. Secondly, we have today another speaker, CS Raj Kapadia, for the today's topic. Our faculty for this session, Mr. Raj Kapadia, is a company secretary and a law graduate. He is a founder and CEO of ROC Kapadia and Associates, providing full range of services to the global clients in setting up of businesses in India and also handhold them in providing full range of services under compliance, statutory and regularly aspect. He is a commerce graduate from Mitibai College in Mumbai and thereafter has pursued company secretary from the Institute of Company Secretaries of India. He is also a law graduate from Mumbai University. He is also registered as a trademark professionals under trademark rules. As a mark of contribution to the profession, he is associated as a convener with the Ghatkopar Knowledge Center of the Institute of Company Secretaries. He has been a faculty being various forums including IIT Indore. He has also contributed articles from CCGRT of the ICAI. Thank you, both the speakers. Lalit, over to you, sir.
Thank you, Nilesh, for the brief introduction. Now, may I request Surendra sir to start his session, please. Sir, you may start your hand. Perfect.
Thank you, Lalit. Thank you, Nilesh, and Raj, my co-speaker. It's always a pleasure to speak to the chartered accountants on the subject which is close to us. Before I start on the topic given to me, let me give you a very broad overview of the Companies Act 2013. As you can see on the screen, the Companies Act 2013, which replaced the Companies Act 1956, is one of the lengthiest legislation. It's divided into 30 chapters. In all, well, the last chapter number is 29, but then we got a new chapter added recently, is numbered as 21 capital A, and therefore the total number of chapters we have are 30. In addition to 500 sections, the Act is supported by 7 schedules. The most specific feature of the new Act, that is the Companies Act 2013, is this phrase "as may be prescribed" appearing practically at 70% of the sections. And wherever the term "as may be prescribed" appears, we have to go to the applicable rules. for the simple reason that it's not possible to amend the act from time to time. What the government has decided that, okay, let's have the rule making authority being given to the Ministry of Corporate Affairs. And therefore, wherever this term as may be prescribed appears, we are supposed to refer to the applicable rules. Now, to give you an idea, in all we have, as on today, 49 rules notified by the Ministry of Corporate Affairs pursuant to various provisions of the Companies Act 2013. These rules have been amended 199 times, and that is somewhat an alarming information. From 1st April 2014 till today, these 49 rules have been amended 199 times, and therefore to keep a track of all these amendments is a little complicated task. In addition to the rules, we also have 21 orders issued by the Ministry of Corporate Affairs pursuant to some or other provisions of the Companies Act 2013. The two rules which are very close to the activities of chartered accountants are, one is the Company Audit Report Order Rules 2019, that's CARO, and the other is NFRA order. In addition to these rules and orders, we also have various circulars and notifications issued by the Ministry of Corporate Affairs. I just took a total this morning itself. From 1st April 2014 till date, 300 plus notifications and circulars have been issued. And yes, these circulars and notifications also have a bearing on the enforcement of the Companies Act 2013. We also have 4 exemption notifications. Yes, through exemption notifications, our life is made comfortable. Certain companies are given certain exemptions from complying with various provisions of the Act, or some relaxations have been provided. And these exemptions are given to 4 sectors. For private companies, we have a notification. It's very famous notification known as 15th June 2015 notification, which was again amended once. We have a notification for exemptions to government companies. We have a notification for exemption to Section 8 companies, which were earlier known as Section 25 companies. And we also have an exemption notification on Nidhi companies. So when you are talking about application or execution of any provision relating to the Companies Act 2013, you are supposed to take care of not only 500 plus sections and 7 schedules, but also 49 rules, the amendments thereto, 21 orders, 300 plus circulars and notifications, exemption notifications, and the secretarial standards issued by the Institute of Company Secretaries of India. The Companies Act 2013 has given recognition to 2 secretarial standards. One standard relating to the board meetings and the other standard relating to the general meetings. We call them as SS1 and SS2. They are integral part of the Companies Act 2013. And in addition to all this, we have numerous judgments issued by various authorities, namely the National Company Law Tribunal, the National Company Law Appellate Tribunal, in certain cases by the High Courts and the Supreme Court. So in all, the Companies Act 2013 becomes really a huge document, and this document has been amended 4 times in last 7 years. The first amendment took place in the year 2015 when 23 clauses were sought to be either replaced or substituted or amended by the Amendment Act. The second big amendment came in the year 2017, wherein 93 amendments were suggested and notified to the Companies Act 2013. The third amendment, which was preceded by the amendment ordinance, was in the form of the Companies Amendment Act 2019, where 44 amendments were introduced. And the last and the recent amendment, which took place in the year September 2020 only, about 2 months back, this Amendment Act introduced about 65 changes in the Act. And therefore, we need to practically upgrade our skills relating to the company law every week, keeping in mind the amendment to the act or the rules or the notification or the circular or any other information. And to give you an overview, in all 12,83,000 plus companies are in existence. This is a statistics released by the Ministry of Corporate Affairs, and the statistics is as of 30th November 2020. We have only 6,770 companies and only 58,471 unlisted public company. About 12 lakh companies are registered and operating as private companies and one-person companies. So now for all these companies to take care of various compliances under the Companies Act 2013, which is 500 plus sections large, there is a possibility that the lapses may happen. And realizing that the Act is a recent instrument, compliance at times due to inadvertence remains uncomplied with. And therefore, various representations were made to the government, and then MCA, finally the Ministry of Corporate Affairs, decided to come out with a scheme which is known as CFSS, that is the Company's Fresh Start Scheme 2020. Initially, this scheme was in force till 30th September 2019, but again, in view of the pandemic and in view of the representations made by the stakeholders, the government has decided to extend it to 31st December 2020. And therefore, we are practically in the last phase of this scheme. And it's definitely a wonderful scheme. Those who are in the compliance activity would find it really useful for the simple reason that the large number of penalties, large amount of penalties are prescribed under the Companies Act. And by taking advantage of this scheme, those penalties can be practically avoided. A brief background, it's again in the drive of the Ministry of Corporate Affairs vision that we need to provide all possible mechanism by which doing business becomes easy. The government doesn't want business to be loaded with the compliance burdens or tensions. And therefore, simplification of the law is order of the day. And wherever they feel that the stakeholders are finding it difficult to comply with different provisions, they try to simplify those provisions on the basis of the feedback given by the stakeholders. And that is the main reason, which is why we have seen that the Act was amended in the year 2015, then 2017, then 2019, then 2020. As and when sufficient documents are made available to the ministry stating that compliance with these particular norms are becoming difficult, they try to come out with a simpler mechanism. They try to relax the provisions, and again, they try to make the life of the business people easy by unburdening them from irrelevant or complex compliances. So it's more in the nature of a one-time settlement scheme. Wherever there are non-compliances are connected to filing of forms or returns or documents. So it's basically event-related activities which are not notified to the Ministry of Corporate Affairs. Because under the Companies Act, there is a mechanism whereby we are supposed to keep the regulator posted with various events happening during the currency of the company's activities. And these activities can broadly be classified into two categories. One is annual compliance, which requires a company to file two forms every year. One is form MGT7, which is in the form of an annual return, which needs to be filed within 60 days of the closure of the annual general meeting. And other is the filing of financial statement, rather audited financial statement, which needs to be filed within 30 days from the closure of the annual general meeting, where the audited accounts are adopted by the members. Now, these two are the annual requirements which every company has to comply with every year. And for last 2 years, the penalty for non-compliance or non-filing of these two documents is really high. It goes to the tune of 100 rupees per day. So if the annual accounts are not filed, say within 30 days from the closure of the annual general meeting, the filing fee will be increased by 100 rupees per day. And same is the case with the filing of annual return, which if not filed within 60 days from the closure of the annual general meeting, the additional fee would be, is like meter down approach where you have to keep paying 100 rupees per day. In addition to these two forms, which are to be filed by every company every year on annual basis, there are various other forms which needs to be filed on the basis of the happening of events. So for example, if there's a change in the registered office of the company, we are supposed to file a form within 30 days from the shifting of the registered office. If there are allotment of securities, we are supposed to file a form within 30 days from the date of allotment. Of course, if the allotment relates to private placement under section 42, this deadline of 40 days is reduced to 15 days. If there is a change in the directorship, if there is an appointment of a director, we have to file form DIR 12 within 30 days. If there is a cessation in the office of the director, again, we have to file form DIR 12 within 30 days. If there is a change in the designation of a director, say for example, an additional director whose appointment is regularized in the annual general meeting, again, we have to file form DIR 12 within 30 days. As and when a managerial personnel is appointed, we have to file form MR1 within 60 days from the date of approval of the appointment by the board of directors generally. Depending on the scenario, at times, the annual general meeting or general meeting also happens within a period of 60 days. In that case, we wait till the annual general meeting and then file this form MR1. So from that perspective, depending on the happening of the event in the life of a company, we are supposed to file the forms. In addition to thereto, there is a form which has to be filed by every director to keep his director's identification number alive. As you all are aware, I think in the year 2007 or 2006, every director was mandated to hold a unique identification number, which is known as DIN, Director's Identification Number. From the year 2018, they made it mandatory that this director's identification number needs to be renewed every year. Initially, they introduced a form which is known as AR3 KYC. Is like know your customer kind of form. And from 2019 onwards, they said that if there are no changes in the information relating to a director, namely his passport number, his name in the PAN card, his residential address, his Aadhaar number, if these information are not changing, in that case, this KYC can be done on electronic basis, and they introduced e-KYC now also. And any default in doing this renewal would attract a penalty of 5,000 rupees, which has to be paid by the director concerned, because it's his identification number which is to be introduced. And it was realized by the Ministry of Corporate Affairs, especially based on numerous representations made by the institutes, by the chambers of commerce, that the MCA should come out with some kind of mechanism whereby the inadvertent compliance can be condoned, and the companies be given a chance to set the house in order. And from that perspective, the MCA came out with this scheme by way of a notification on 30th March 2020. And it was a coincidence again that we also had entered into a pandemic era. Initially, it was enforced till 30th September 2020. But then again, based on the practical difficulties faced by us all, especially in the city of Mumbai, where transportation and traveling is difficult even today, the scheme has been extended till the 31st December 2020. Let's see the key features of this scheme. Again, the genesis of this scheme can be traced in a circular dated 24th March 2020, where government hinted that, okay, we need to come out with something which help the companies in putting their house in order as far as the compliances are concerned. And the para 1 of this circular dated 24th March reads that no additional fee shall be charged for late filing during moratorium period, that is 1st April to 30th September 2020, in respect of any document, return, statement, etc. required to be filed in MCA 21, irrespective of its due date. So this was the first signal which we received from the MCA that something is in the pipeline, wherein we would be getting some kind of scheme where the reduction of filing fee would be introduced. And then came the scheme on 30th March 2020, which gave us many more privileges and benefits. And the operative para of this scheme, 30th March 2020, reads that in furtherance of the previous circular, the CFSS, that is Companies Fresh Start Scheme 2020, has been hosted on March 30th, 2020 by General Circular number 12 of 2020. And that is the master circular, which has really made the life of all the corporates comfortable to assist defaulting companies with a one-time opportunity for filing all e-forms, practically all, without any additional fee between April 1, 2020 to September 30, 2020. And as I said earlier, now it's from April 1, 2020 to December 31st, 2020. Practically all forms are covered by the scheme, and the most beautiful part of this whole scheme is that no additional fee would be levied if there is a delay in filing of the pending forms in this duration, except few forms which are prescribed in the scheme itself. And the advantage of the scheme is that the scheme, whoever is availing the scheme, would provide a kind of immunity. The operative para reads as, it will provide immunity from launch of prosecution or proceeding for imposing penalty shall be provided only to the extent under the Act pertain to any delay associated with the filing of belated documents. So yes, it will provide immunity, but immunity only to the extent it relates to the late filing of the documents. It's been very clearly specified in the scheme itself that it's not from, immunity is not from any other kind of criminal prosecution, etc. Only for late filing of the forms wherein you are supposed to intimate the regulator by furnishing a resolution, a board resolution, a shareholders meeting resolution, a document, a statement, namely the financial statement, the list of members. Only in filing of these documents, if there is a delay, no prosecution would be launched against the people who are responsible for filing of these information through some or other form, say PAS3 for allotment of shares, or INC 28 for change in registered office, or DIR 12 for change in directorship, or MR1 for appointment of a managerial personnel. Or to the extent, I would go to the extent of saying, even if there is a delay in filing of ADT1, then also the immunity can be claimed, and the relaxation or rather reduction in or relief from paying additional fee can be availed by filing ADT1, ADT3. We have done it in a number of cases, because ADT1, which needs to be filed within 15 days, at times is left out for the simple reason that generally the AGMs of the companies are held in the month of September, last week of September. And October is a busy month for the companies. They are all occupied in filing of financial statement. And in this pressure, they at times forget to file ADT1. And now, of course, in the new act, filing ADT1 is the responsibility of not the auditor, but of the company concerned. And therefore, wherever there are delays in filing of ADT1, that also can be now filed under the scheme. And it's very clearly said that no immunity to company or its officers shall be given from their past wrongdoings and misdeeds. It's not NOC that, okay, whatever wrongs you have done in the Companies Act, no prosecution or no action would be taken against you. That's not the kind of immunity they are talking about. They are talking about immunity only from late filing of the documents. And the example, say for example, if there is a contravention relating to non-calling of an AGM before the due date. As you are aware, the AGM has to be held within 15 months from the date of the previous AGM. And in the AGM, we are supposed to hold the account, adopt the accounts, which needs to be done within 6 months from the closure of the financial year. And for any reason, if the AGM has not been called or there is a delay in calling of the AGM in the year, say 2019 or 2018, and the forms relating to the same have not been filed, the delayed activity beyond the due date without getting prior approval from the Registrar of Companies would not be condoned under this scheme. Yes, delayed filing of accounts would be accepted. There would be no additional fee at the rate of 100 rupees per day would be levied. But as far as the contravention relating to not holding AGM within the prescribed time is concerned, that contravention would not be condoned under this scheme. Or other example, misapplication of fund raised through allotment of securities. Again, here also they have given a specific example of section 42. Say for example, 42 says that if you raise funds through private placement and you are supposed to file the form batch 3 within 15 days from the date of allotment. Without filing form batch 3, you are not supposed to use the funds received through private placement. There is a clear ban. If the funds are used before 15 days or before filing this document, those kind of contraventions would not be eligible for immunity from the launch of prosecution. That's very clearly spelled out in the scheme itself. Or appointment of KMP in violation of section 197 or schedule 5, etc. are not exempt under the scheme or will not be eligible for any kind of immunity. Applicability of scheme, not that every company is eligible. Yes, you can generalize a statement that almost all companies are eligible, but there are some disqualifications also, and that's why let's get into the details as to who all are eligible and who all are not eligible, qualified and disqualified. So first we talk of the qualified companies or the companies who are eligible to avail the scheme. A defaulting company is permitted to avail the benefits under this scheme. Now, what's the meaning of the defaulting company? That's spelled out in the scheme itself. And according to the scheme, defaulting company means a company defined under the Act and which has made default in filing of any document, statement, return, etc., including annual statutory document on MCA 21 registry. So you can very easily make out from this definition itself that the default should relate to filing of a document or a statement or a return. Say for example, annual return, or for example, financial statement audited by the auditors, or a document like list of members or a board resolution where the decision is taken by the board relating to making of loan or making of investment or borrowing funds, etc., etc. Those kind of documents which are required to be filed by filing MGT 14 within 30 days from the date of board meeting. Those kind of lapses can be made good by the companies concerned. There is also a term which is introduced under this act, which is known as the defaulting inactive company. And with reference to defaulting inactive companies, what the scheme says that defaulting inactive companies can take privilege of this scheme only for two purposes. One, for getting the company declared as a dormant company under section 455. And the other, for making application for striking off the name of the company. Now for this, it's better that we also see as to what's the definition of inactive company. And this definition is given under section 455 bracket 1 of the Companies Act. Now, I've covered this definition in this presentation just now, and therefore the presentation which was circulated by Mr. Kaushik would not contain this particular slide. We'll come back to this slide again, but let's quickly see as to what is the definition of inactive company. Now, inactive company is defined under section 455. 455 generally talks about a dormant company, and an explanation is added to subsection 1 of section 455, and that explanation says, and again it's connected to the chartered accountants, it says inactive company means a company which has not been carrying on any business or operation, or which has not made any significant accounting transaction during the last 2 financial years, or which has not filed financial statements and annual returns during the last 2 financial years. These companies are eligible to get themselves declared a dormant company under section 455. And once you become a dormant company, in that case, the compliances are greatly reduced and you are eligible to avail a number of benefits under the Companies Act, because you have intimated the Ministry of Corporate Affairs that we are a dormant company, which means our company will not carry out any significant accounting transaction in the near future. The moment you decide to do any significant accounting transaction, you have an option to go to the Registrar of Companies and say that now we want again our status to be changed from dormant company to an active company. So this privilege is available. Now, the crucial question, what do you mean by significant accounting transaction? Of course, the chartered accountants would come out with numerous definitions or explanations for this term, but to avoid any ambiguity, the explanation itself says that significant accounting transactions mean any transaction other than following transaction. So if a company has done any transaction other than the transactions listed here, that is A, B, C, D, that company is not eligible to call itself an inactive company, and that company cannot be declared as a dormant company. Only those companies who have done only the 4 categories of transactions which are listed here is eligible to approach the Registrar of Companies stating that please declare us a dormant company. And which are these transactions which are allowed to be carried out by a dormant company? Number 1, payment of fee by a company to the registrar. Obviously, to the Registrar of Companies for filing various intimation, you are supposed to approach the ROC and pay the filing fee. Payments made by it to fulfill the requirement of this act or any other law. There is a possibility that the company might be a member of any other statutory body wherein it may have to pay annual filing fee or annual subscription. In that case, those kind of payments are permitted. They would be non-significant accounting transaction. Allotment of share to fulfill the requirement of this act. In general, allotment of share would be a significant accounting transaction. But if allotment of share is being made only to comply with the provisions of the Companies Act 2013, in that case, it would not be treated as a significant accounting transaction. Say, for example, as on today, there is no minimum capital requirement. Earlier, we used to have a norm that a private company would have the minimum paid up capital, which would not go below 1 lakh of rupees. And through the amendment, they have removed this particular requirement. So as on today, if a private company is incorporated, you can have any paid up capital as the minimum. So you can even have, say, 200 rupees as the minimum paid up capital. If at a later date, suppose the government decides that every private company will have to have a minimum paid up capital of, say, 1 lakh rupee. In that case, the companies will have to increase their paid up capital from this 200 rupees to 1 lakh rupee. In that case, such increase or such allotment of share capital would not be treated as a significant accounting transaction, because the allotment is being made to fulfill the requirements of this act. If the allotment is made for any other reason, that company would not be treated as an inactive company. And the money is being paid for maintenance of the records and office of the company. Because if it is a company, it is supposed to maintain a registered office. There is a very strict requirement. We all filed Form INC 22A last year with giving the photograph of the registered office and director sitting in the registered office. All those details were furnished with the registrar of companies. So the ROC is fully familiar that you are supposed to maintain an office and you are supposed to keep so many documents under the Companies Act at your registered office. So to maintain the registered office and keeping the records there, you are supposed to incur some expenditure. Those expenditures are also allowed and they would not be treated as significant accounting transaction. So any company who has incurred only these 4 transactions is eligible to get itself declared as an inactive company, and such companies are given an option under this scheme. I go back to the previous slide. Such inactive companies who have not filed their annual accounts and annual return for last 2 years, or who have not done any activity for last 2 years. And again, this is something which needs to be certified and declared by the auditors of the company. They have 2 options under the scheme. Number 1, they can file Form MSC1. And by filing Form MSC1, the registrar of companies would declare that company as a dormant company on its portal. And thereafter, you are not allowed to do any activity, in the sense that thereafter, if you want to say file a form for increase in capital, etc., that form will not be expected by the system at all. If at all you want to do it, you have to again make a request to the registrar of companies by filing a form, get your status changed from dormant to active, and then you can do. The other option given to such companies who are inactive for last 2 years, who have not done anything or who have not filed, they have an option. They can apply for striking of the name of the company. And under the new act, there is a provision. The company on its own can pass a special resolution, make an application to the registrar of companies saying that our name is struck off from the register of members of the company, registrar of companies. In that case, there is a requirement that all filing needs to be completed before making an application under section under Form STK2. The directors are supposed to give an affidavit that all forms have been filed, and especially annual forms, annual return and annual accounts, Form AOC 4 and Form MGT 7 for all completed financial years needs to be filed. Now, if these forms are filed now, there would be no additional fee levied, 100 rupees per day. And at the same time, such companies can avail this facility by filing Form STK2. So these 2 are the wayouts suggested to the defaulting inactive companies, and other defaulting companies are eligible to avail a benefit by filing all other forms. Again, vanishing companies also are not eligible to claim this benefit. Now, what is the meaning of vanishing company? Those who are in profession for a long time would know that in the year 1992 onwards, we have had a wave of listed companies coming out. Practically every 5th day, you'll find that some or other company getting listed. Once upon a time, there were about 12,000 plus listed companies in the country whose shares were listed on one or other stock exchange. And you've seen in the beginning, as of today, not more than 6,000-7,000 companies are listed. And what happened was that those other companies, many of those companies who were listed once upon a time were not traceable. And that's why they devised a term called vanishing company. This vanishing company means a company registered under the Companies Act or the previous company law. Generally, they were registered under the Companies Act 1956 only, because in the new act, it's very difficult to get registered and then vanish. In the old law, there were little possibilities, or any other law for the time being in force and listed with stock exchange. So only a company which was listed once upon a time can fall into the category of vanishing company. An unlisted company, a company which was never listed, would never be termed as a vanishing company, and which has failed to file its returns with the registrar of companies and stock exchanges for a consecutive period of 2 years, and not maintaining its registered office at the address notified with the registrar of companies or stock exchange, and none of its directors are traceable. In fact, many of you must be aware or may have even faced, because at one time, SEBI thought it appropriate that, okay, these companies are not traceable, directors are not traceable, let's get hold of the auditors. And then they started writing to all the auditors that if you know any information about this company or its directors, please cooperate with us. Those vanishing companies cannot take advantage of this scheme. And the documents relating to charges, CHG1, CHG4, CHG8, and CHG9 were not included in the list of the forms where this scheme would be available. Of course, later, on 17th June, government came out with a special scheme where they said, okay, so far as there are delays in filing of form CHG1 and CHG9, there would be a relaxation in the payment of additional fee. And the other form which cannot be covered by the scheme is form SH7, which relates to the increase in authorized capital. For the simple reason that in case of increase in authorized capital, there are two elements of the fee which needs to be paid. One is the filing fee to be paid to the Ministry of Corporate Affairs, and the other is the stamp duty which is to be paid to the state government. And therefore, it's difficult for the Ministry of Corporate Affairs to correlate these two issues. Every state government has its own slab through which the duty is to be paid. The duties are calculated by the system based on the place where the registered office of the company is sought to be or is already in existence, and maybe perhaps because of that complication. And moreover, in case of delay in filing of the filing fee relating to increase in authorized share capital, you are supposed to pay interest at a prescribed rate, again, which is calculated by the system only. And therefore, they may have thought that this particular mechanism, if it is made available with reference to form SH7, may be either misused or may be difficult to implement. And that's why form SH7 even today is not covered by the scheme. Form CHG8, which relates to making of application to the central government in certain cases for condonation of delay, this scheme is not available. Form CHG4, which relates to intimating the registrar of companies for satisfaction of an existing charge, again, this scheme is not available. Form CHG1, which relates to creation of security on the assets of the company, or form CHG9, which relates to the issuance of secured debentures. This scheme is available for calculation of the day from which the penalty or late fee would be calculated. Initially, they said all the dates would be deemed to commence from 1st October 2020, and then they extended the scheme to 28th September, and therefore now the deadline is 1st January 2020 so far as the calculations are concerned. Immunity certificate, the soul of the whole scheme. Once the scheme is closed, thereafter every company who has availed the benefit under this scheme will have to make an application to the Ministry of Corporate Affairs asking for an immunity certificate. This application will have to be made in a form which is known as Form CFSS 2020. It's an electronic form. Actual form is yet to be placed on the MCA portal for the obvious reason that the scheme is not closed yet. I think if there is no further extension, in that case, this form will be made available to us on 1st January 2021. And in this form, the companies will have to make an application to the registrar of companies that please grant us the immunity for delayed filing of various forms. This form will have to be filed by the companies within a period of 6 months from the closure of the scheme. So if the scheme closes on 31st December 2020, in that case, the deadline would be 30th June 2021. But if the scheme is extended further, then obviously this deadline would be automatically enhanced. The specialty of this form, of course, we are yet to get the help of this form. And once we see the electronic form, we'll be able to know as to what are the actual applications. But basically what is to be attached with this form is that in case the company has filed any petition or any application to a judicial authority against the Ministry of Corporate Affairs or any agency thereof, like against the Registrar of Companies or against Regional Director, the company or the officer thereof will have to withdraw that application first. And the proof of that withdrawal will have to be attached to this form CFSS 2020, stating that we have filed an application against the Registrar of Companies or the Regional Director to any agency. We have requested that agency that we are withdrawing that, and the certificate from the agency saying that your application has been withdrawn will have to be attached to this form. Then only the immunity certificate will be given by the Registrar of Companies. And what will be the effect of this immunity? Well, as far as your applications are concerned, you have withdrawn, and the proof thereof is attached to the form. Once you file the form, thereafter, if the Ministry of Corporate Affairs has filed any prosecution against you relating to filing of these forms or submission of these documents or statements or information, once you file this form, then the Ministry of Corporate Affairs will withdraw the applications which were filed against you. So it's a win-win situation. All the cases against the Ministry of Corporate Affairs which are covered by the scheme will be withdrawn. At the same time, all the cases which were filed by the Ministry of Corporate Affairs against the companies or officers thereof, which are covered by the scheme, will be withdrawn. So to that extent, the judiciary will also be greatly relieved. And if you are aware, the company law committees have always suggested that it's high time that we think in terms of declogging, especially the National Company Law Tribunal. The Companies Amendment Act 2019 was mainly for withdrawal or for reduction of the burden of the National Company Law Tribunal, which has to attend to the matters not only relating to the Companies Act 2013, but also relating to the Insolvency and Bankruptcy Code 2016. And Appellate Tribunal, in addition to the Companies Act and the IBC, also has to hear the appeals arising out of the matters, the orders passed by the Competition Commission of India. So from that perspective, if these cases are withdrawn, there would be a great reduction in the burden of the judicial authorities under the Companies Act 2013. Few queries were raised by the members, which are addressed in this presentation. Let's take quickly. Of course, some of them have already been covered in the previous discussion. I'll take the questions one by one. Whether companies which are strike-off can avail the scheme. The response is the status of the company while availing the scheme should be active. So if you are dormant or inactive or struck off, then you are not eligible to avail this scheme. Whether deactivated DIN of a director activated through the scheme. Yes, if the deactivation relates to non-filing of DIR3 KYC. And this is again a wonderful opportunity for filing DIR3 KYC or eKYC relating to DIR3 or INC 22 capital A, because normal filing fee for filing of these forms is 5,000 rupees and not 600 rupees like other forms. So it's advisable that all deactivated DINs are activated, and wherever form INC 22A active has not been filed, the same be filed as early as possible. For filing of MGT 14, AOC 4 relating to past years can be avail the benefit under the scheme. The answer is that AOC 4, yes, you are eligible, and especially from 2019, you'll be eligible to claim benefits for at the rate of 100 rupees per day, which would be a huge amount. With reference to MGT 14, if there is a delay beyond 300 days, the condonation is required. And that is a little long process, and therefore I don't think that you will be able to take advantage of the scheme. In case of a company whose status as per MCA is active for filing, but whose all directors are disqualified, what's the way out to avail the benefits for the fresh start scheme. As clearly stated in the scheme itself, the scheme is for the companies and not for the directors, and therefore disqualification of director is something which is not addressed by the scheme at all. If the director has been disqualified in the financial year 2016-17 and the filing is still pending, can the benefit of CFSS be availed by the company if status of the company is still active? Well, if the status is active, in that case, the company can approach the back-end office of the registrar of companies, get one more director appointed, and use that director's signature for filing of this form and avail the benefit. If the directors are disqualified, then those disqualified directors cannot follow any mechanism by which they hereinafter would become the qualified under the scheme. What is the effect of the scheme? No need to pay an additional fee. There's the biggest advantage. Immunity certificate would be made available to the company. Company shall withdraw the appeals against any prosecution. ROC shall withdraw all the prosecutions relating to the forms which have been filed under the scheme. And ROC shall also withdraw the proceedings relating to adjudication of penalties under section 454. So a major relief can be availed through the scheme. XYZ Private Limited has not filed its annual return and financial statements in the last few years. Can they be filed pending compliance? The answer is yes. All your pending documents are accepted by the system under the CFSS. Can a deactivated director get activated? Yes. If it's a connect, if the matter relates to deactivated director, advantage is available. If the matter relates to disqualified director, no privilege available under the scheme. Can a deactivated director get activated? Again, answer is yes. Does CFSS 2020 form require certification? The immunity application CFSS form 2020 need not be certified by a practicing chartered accountant or company secretary or cost accountant, because it's basically account of information which have already been furnished to the Ministry of Corporate Affairs. What's the due date? The due date is 31st, is 6 months from the closure of the scheme, that is 30th June 2021. This is a form. Key features. What you have to fill up is the corporate identification number. Once you fill up that, the name, registered office, etc., would come from the system. Then we have to give the details about the forms which have been filed with the registrar of companies under the scheme. All the details will be written here. Like if there is a late filing of form DIR 12, I'm sure DPT form must have been delayed by a number of companies because it was not possible for the companies to get the information as of 31st March relating to the deposits under the Companies Act. So these information are required to be filed, and the details of the prosecution and penalty which have been withdrawn wherever applicable are to be attached to this form, giving a commitment to the Ministry of Corporate Affairs that no cases filed by the company or its officer against the Ministry of Corporate Affairs are pending. So from the company side, this form will give a relief or comfort to the MCA that all prosecutions have been withdrawn. And once this form is approved, there would be a certificate which would be issued by the Ministry of Corporate Affairs. This is a format of the certificate which is given in the scheme itself, wherein the key part is that whereas the company has also declared that no petition or appeal was filed against any notice issued or complaint filed before any court or NCLT or NCLAT or regional director or any other adjudicating authority for violation of the provision under the Act in respect of the above mentioned documents which are listed in the form. Now, therefore, in exercise of the power conferred under CFSS, the Ministry of Corporate Affairs issues the certificate that the said company granting immunity from prosecution or imposition of penalty under the Act subject to the provisions contained in the scheme. So this kind of certificate also will be issued. And therefore, in fact, the suggestion is that all the companies who have already availed benefit of the scheme and who will be availing more benefits in the next 15 days, should start preparing the list of all the delayed documents which have been filed under the scheme right now, so as to ensure that there is no lapse. Because if you start preparing the list in the month of January, February, there is a possibility some information would be left out. As of now, everything is fresh in our mind, and therefore we should make an attempt to ensure that all the forms wherein we have availed this facility are listed in this form CFSS 2020, and the immunity is granted to us. That's all from my side on behalf of Kaushik Jhaveri. Now over to you, the coordinator, sir. Or rather, I think Raj would take over from me straight, like a relay race. So over to Raj.
Thank you so very much, CS Surendraji, for a very detailed presentation on the scheme, which covered the practical aspects, examples as well. So I'll start sharing the screen now with my presentation. One second. This is visible, right? Is this visible?
Yes, it is.
Yes, sir. Yes.
Yeah. Oh, thank you. So a very detailed presentation in the first part of this session on the company's fresh start scheme. So likewise, for before I begin with my session, just a quote to begin the session. So this quote is, it states that my biggest motivation, just to keep challenging myself. I see life almost like one long university education that I never had. Every day I'm learning something new. This quote is by Richard Branson, who is the founder of Virgin Group. So as he said, every day I'm learning something new. And as Surendra sir covered the details of the Companies Act, the various amendments and circulars, and including the schemes. So there's a lot to learn, and let's today start our let's today continue the learning with CFSS, with the LLP settlement scheme, and there are a number of other amendments and relaxations basically which have been given by the NCA considering the COVID-19 pandemic. So in this part of the presentation, I'll be covering those the LLP settlement scheme and some further amendments and relaxations which basically have been provided to all the companies. So first of all, the CFSS, which has been covered in the first session. So we would be happy to take on any questions that the participants would be having at the end of the session together. So as sir has briefed that this section 403, which provides for very, very heavy penalties of up to ₹100 per day for the annual filing. So this scheme has provided, is definitely providing relief for the corporates who wish to file their overdue documents. But just considering the late fees of 100 per day for both the company's annual filings as well as the LLP's annual filings. So even for LLPs, Form 8, Form 11, if there are any delays, then the late penalties range to ₹100 per day, and there is no upper limit. So that comes to a very, very sizable sum. So if you, as the last line reads, if you feel compliance is expensive, try non-compliance now. So this is again, it's a one-time opportunity to the companies and the LLPs to complete their overdue filings and to make a fresh start of their activities and fresh start from this moment. So what is CFSS is already covered. I'll not get into that. We can of course address the questions at the end. So now is the LLP settlement scheme. So just like the company's fresh start scheme, the LLP settlement scheme is for the limited liability partnerships which have been incorporated in India. LLP as a a concept is relatively new. The act is the LLP Act of 2008. So as a concept, LLP has just been introduced over the last 10 or 12 years in India. It is slowly gaining momentum. People are now realizing the benefits of the LLP. The name is Limited Liability Partnership. So as the name suggests, the partnership, it's a partnership form with a limited liability. So in a way, it has the benefits of both the partnership firm as well as a private limited company. And also it has very limited compliances as well. So if any entrepreneur or two or more people wish to start their own business, this is an LLP as an entity is being explored currently and is gaining momentum. Just some brief about the LLP scheme. This is for the defaulting limited liability partnerships to file the belated documents. As I said, the limited liability partnerships, the compliances with under the LLP Act with respect as compared to a private company, there are limited compliances for a LLP. For example, if I may give some examples which are also there in the LLP settlement scheme, there are 3 or 4 forms. For example, there is a form 3, which is for any LLP deed or the partnership agreement which has been entered into for formation of the LLP, as well as for any changes. So if, for example, there is any change in partner, or there is any change in the contribution or the profit sharing ratio or the terms and conditions, so then there are further supplementary deeds which are entered into. So for all these deeds as well as for changes, there is a form 3 which is to be filed with the NCA. Similarly, there is a form 4 for any change in partners. So if there is any appointment of partner, or there is any retirement or resignation of partner, then there is a form 4 which is to be filed. There is a form 8 which is to be filed, which is a statement of solvency, and also there is a form 11 which is the annual return of the LLPs. So like this, there are some forms which are to be filed annually as well as based on any event. For example, there is any change in partners or in registered office, and likewise. So for non-filing, as I said, the late fees ranges, there are very heavy late fee penalties which range to up to ₹100 per day. So documents which are not filed or registered in time can be filed. As I said, form 3 which is to be filed, but there are LLPs, there are instances wherein you enter into the LLP deed, but then the form 3 which is to be filed for even for the initial agreement as well as for any changes. So form 3 which is to be filed is not filed. So in that case, this becomes a document which is not filed or a overdue document. So like CFSS, even here, there would be no prosecution for defaulting filing of these documents. So for filing of form 3, form 4, form 8, form 11 and such forms which have not been filed normally, you can make use of this scheme and you can actually file these. No prosecution for any default would be initiated. So for example, as I just mentioned about the deed, so LLP is incorporated, but deed is executed, but it is not filed. So you can now file. So as I said, late fee of ₹100 per day, which is normally there for non-filing, which would not apply if the documents are filed under LLP settlement scheme. This is the a very brief gist of the scheme. It is the LLP settlement scheme of 2020. It is the one-time condonation of delay scheme for filing statutorily required documents with the NCA. The due date has been recently extended till 31st of December 2020. So for another 20 days, you can make use of this scheme and file all the overdue documents. So this is the first, this is the opportunity to the defaulting limited liability partnerships to file belated documents which were due for filing by 30th of November 2020. Now this, to understand the due for filing is very important to understand. Okay, let me take an example of form 8 for 2020. So for March 2020, form 8 would be due for filing by 31st of October 2020. Likewise, form 11 for March 2020 would be due for filing by 31st of May 2020. 60 days from the close of financial year would be 31st of May 2020. So both these due dates of Form 8 and Form 11 would fall within this criteria of due for filing by 30th November 2020. So even for 2020, if Form 8, Form 11 have not yet been filed in December, you can make use of this scheme and actually file this without any late fee. Only normal fee for only the normal fee for filing of the bill-dated documents would be charged. There would be no additional fee levied. If all pending documents till 30th of November 2020 would be filed, and there would be no prosecution launched. As I have already stated, the documents to be filed include Form 8, which is statement of solvency, Form 11 is annual return, Form 3, which is deed, including any changes, Form 4 is for designated partner. These 4 forms form part of the scheme. So likewise, like all the required forms are covered under this scheme. Defaults in filing these documents are normally met with heavy penalties and in some cases even criminal prosecution. But due to this scheme, there would be no additional fee charged. Scheme, just like CFSS, the scheme shall not apply to LLPs which have made application for being struck off in Form LLP 24. So if you have already initiated the process for being struck off, or if in case an LLP or the order has been passed by the ROC that the LLP is struck off, then that LLP cannot make use of this scheme. This was about the company's fresh start scheme and the LLP settlement scheme. So now in the next part of this presentation, I thought to cover various recent amendments and circulars and also some relaxations which have been provided by the MCA in view of the pandemic of COVID-19. So most of these amendments are highly relevant to us as professionals, considering that the due date falls on 31st of December 2020, as it is a peak season of the filing season of the financials being closed, being adopted, of AGMs. So I thought it highly relevant to cover in this presentation for the benefit of all the participants. So first recent amendment in this criteria is extension of annual general meeting. Now, for an annual general meeting, the due dates are prescribed in the Companies Act 2013 in section 96, subsection 1. So there are 2 criteria which are normally prescribed in section 96, subsection 1. One criteria is that the annual general meeting should be held on or before 30th, on or before 6 months from the close of financial year. So for 2020, 6 months would be 30th September 2020. And also the gap between the 2 annual general meetings should not be more than 15 months. Now, considering the pandemic and the lockdown, having a physical AGM on or before the 30th of September 2020 was almost impossible. So that is why this extension was granted. So the NCA gave a direction to all the ROCs to issue such orders wherein the due date for holding an annual general meeting was extended. So likewise, ROCs across India, in various jurisdictions, they issued their respective orders. The Registrar of Companies in Mumbai issued the order for extension dated 8th of September 2020. The time limit for holding the annual general meeting under section 96 subsection 1 was extended by 3 months. So this is a relief for companies which could not convene their AGM due to the COVID-19 pandemic and due to the lockdown. Now, before this circular, there was a clarification issued by MCA that whoever wishes to apply for extension are requested to do so by filing GNL1. So there were many companies who filed GNL1. In some cases, it was granted. In some cases, it was pending. In some cases, instead of 3 months, 1 month was granted or 2 months was granted. It was leading to a lot of confusion. So thanks to this order, this relief has been granted without any need to file any GNL1 separately. it is a blanket extension of 3 months from the due date. So mind you, 3 months from the due date does not mean 30th September se 31st of December ho gaya. It is a 3 months. We'll discuss it in the next slide with example how to calculate actually the due date for the annual general meetings. Okay. So this relief is granted by the registrar of companies without in the need to file GNL1 for seeking any extension. And in case GNL1 has been, whether it is it is accepted, whether it is accepted for 1 or 2 months, or whether it is rejected, or whether it is pending. If any company has filed, in all such cases, this extension of 3 months would be deemed to be granted to all such companies, regardless of the status of the GNL1. As I said, there are 3 time limits which are mentioned in section 96 subsection 1 of the Companies Act. So first is the time limit is mentioned for the first annual general meeting. So the first annual general meeting of the companies are to be held within 9 months from the close of the financial year. So for 2020, that first AGM is to be held on or before 31st of December 2020. Next, for every subsequent AGM, that is in normal cases, the annual general meeting is to be held within 6 months from the close of the financial year. So for 31st March 2020, the due date, as I said, would be 30th of September 2020. And the gap between 2 successive AGMs, that is the AGM which was held in 2019 and the AGM which is held in 2020, the gap between those 2 AGMs is to be less than 15 months. Pursuant to the circular, the time limit for AGM other than the first AGM has been extended by 3 months. Now let's understand this by way of an example. Suppose the annual general meeting for March 2019, that is last year, was held on 15th of June 2019. So in 2019, the AGM was held on 15th of June. What would be the due date of AGM as per this circular? Okay. So let's start with section 96(1) without the circular. Okay. So considering circular is not issued under section 96(1), first criteria is 6 months from the close of financial year, which is 30th September 2020. Second criteria is gap between successive AGM less than 15 months. That is, if the AGM is held on 15th June, then the next AGM would the gap between two AGMs, that is of 15 months, comes on 15th of September 2020. The earlier of the two, that is 15th September and 30th September, the earlier of the two is 15th of September 2020. So normally, without this circular, the normal due date should have been 15th of September 2020. Now considering three months of extension, the due date of AGM would be 15th of December 2020. So as we see here, 3 months of extension does not always necessarily mean that it is the due date is extended till 31st of December. It has to be checked in case to case. So now suppose, for example, AGM for 2019 was held on 16th of August 2019. So then what would be the due date? Let's see. Okay. So section 96(1). So first is the standard, this thing, 6 months from the close of financial year, which is 30th of September 2020. And the gap between the two successive AGMs is 15 months. So from 16th of August, 15 months comes to now the August, September, October, and November. So 16th of November 2020. So in this case, the earlier of the two dates would be 30th of September, and the 3 months further extension, that means 31st of December. So in earlier case, the due date came on 15 December. In this case, it came on 31st of December. So likewise, we have to see from case to case basis when the due date falls. Next, another very important and critical amendment was the conduct of annual general meetings and the extraordinary general meetings through audiovisual means or through video conferencing. Considering that the physical conduct of meeting was not possible due to the pandemic, this came as a major relief for companies which were intending to conduct their regular business and which were getting stopped due to the this pandemic. So in this, slide, very briefly, I have tried to cover the gist of the circular. This circular was issued because conduct of annual general meeting through audio-visual means or through video conferencing is not covered under the Companies Act or the rules thereon. So that is why the process was mentioned in this circular, which I have tried to cover here. So this I'll just run through briefly. The clarification on passing of ordinary and special resolutions on account of COVID-19. So clarifications for convening and conducting extraordinary general meetings of members of the companies till 31st of December 2020. So this is valid till 31st of December through video conferencing or other audiovisual means. In absence of specific provisions under Companies Act for meetings through video conferencing or other audiovisual means, the procedure contained in this circular are to be followed. First category is for companies which are required to provide e-voting facility under the Act, or companies which opt for the same, for e-voting. Okay. Recording of the EGM or AGM through video conferencing or other audiovisual means is to be maintained and to be made available on website only in case of public company. So public companies have to maintain the recording and also have to make it available on their website. There has to be a two-way teleconferencing allowed to the members. Like, for example, this app is also there. We are having this meeting on Zoom, which allows for audio as well as video. So this such type of facility is to be maintained such that all the members are able to use the audios and videos. The two-way teleconferencing are to be allowed to members. Facility to enable participation of at least 1,000 members on first come first serve basis. 1,000 members participation is to be allowed. Chairpersons of the committees, auditors are to be allowed without this restriction. So chairperson of various committees, auditors can attend irrespective of 1,000 members being present. Attendance via video conferencing or other audiovisual means is to be counted. Independent directors, if any, and auditors or their representatives are required to attend such meetings. Remote e-voting is to be provided in accordance with this Act. Chairperson is to be appointed as per Section 104 of the Companies Act 2013 if less than 50 members are present at the meeting. If more than 50 are present, then through e-voting during the meeting, or else unless the articles have a specific provision for appointment of chairman, then that specific provision is to be followed, as this is how the chairman is to be appointed. If there are less than 50 members present at the meeting, then voting can be through e-voting or through show of hands as per the case-to-case basis. In all other cases, the voting shall be through e-voting. So in case there are more than 50 members, then e-voting is to be followed. Appointment of proxies is dispensed with. So member is there at a remote location. The member has all the details in the notice. Everything has been circulated to the member. The member can easily attend it as per the convenience from their respective homes. Therefore, there is no question of sending any proxies here. Okay. So proxies cannot be appointed for such a meeting. However, representatives may be appointed. In any case, for body corporates and for non-individual members, they are required to send their representatives to the company. So that is possible. Notice shall include all disclosures of the framework and shall be prominently displayed on the website. So notice has to include all the details relating to the the video conferencing facility which is being used. All directions have to be clearly mentioned. All resolutions under this mechanism are to be filed with ROC within 60 days of the meeting. All resolutions. It is in case of physical meeting, only special resolutions are to be filed. But in case of audio visual meeting or a video conferencing, all resolutions are to be filed with the ROC. Second category is for companies which are not required to provide facilities of e-voting. So provisions relating to attendance, present, conduct of the video conferencing, proxies are the same as already we have discussed. Only difference is where a poll is specifically called for in the meeting, including for appointment of chairman. The companies have to have a dedicated email ID for the poll. this email ID shall be conveyed to all members for voting. Confidentiality and safeguard of the email ID is to be maintained by the company. So this was a short gist of the circular. The companies have to ensure that all other amendments and all other compliances under the Companies Act relating to general meetings are complied with. This is a short gist. Entire circular can be viewed. I have given the link for ready reference. It can be viewed. It is detailed and it is displayed on the MCA website. Next is the audio-visual board meetings. Now, why is this important? Considering this is the peak season, the filing season, the board meetings, and you are required to convene a board meeting for adoption of accounts. How will you do it considering that there is a pandemic situation? For adoption of financial statements and board report, there is no, the Act provides that can only be done through a physical meeting. But then considering pandemic, how to meet physically? Which is why the MCA had issued this circular, wherein they had given they amended Rule 4 of the company's meetings of board and its powers rule, and had allowed the conduct of such meetings for adoption of financial statements to be conducted through audiovisual means. So I thought it relevant to discuss at this gathering. So as I said, Section 179(3) discusses about exercising of powers by the board of directors by a resolution passed only at a board meeting, which includes approval of financial statements and the board reports. So the section provides that these matters only have to be passed at a physically convened board meeting. And Rule 4 of the company's meeting of board and its powers rules, they deal with matters not to be dealt with in a meeting through video conferencing and other audiovisual means. That also includes approval of financial statements and board report. To give a much needed relief, this amendment was introduced. The rule mentions about financial statements and board report to be approved only at a board meeting. However, same has been exempted up till 31st of December 2020 via companies meetings of board and its powers, third amendment rules of 2020, dated 28th of September 2020. So by way of these rules, now the agenda item of approval of financial statements as well as approval of board meeting of board report can now be convened through a audio-visual means, and the financial statements can be approved on audio-visual means only till 31st of December 2020. It's a much needed relief. So I have also in this slide tried to highlight a brief procedure of how to actually go about a audio-visual board meeting. The detailed rule is mentioned in Rule 3 of companies meetings of board and its powers rules. I have briefly tried to cover here. First is the meetings, for meetings through video conferencing and other audiovisual means, the companies have to follow this process, the following process. They have to make necessary arrangement to avoid failure of connection, the technical issues which are very common, like failure of internet, power outage, or the system issues. They are very common. So companies have to ensure that such, in case of such eventuality, what alternatives mode of communication can they have. So they have to figure out. The chairperson of the meeting and the company secretary, if any, shall take due and reasonable care to safeguard the integrity of the meeting. A board meeting is highly confidential. So who is attending, who is having access to the meeting has to be safeguarded. They have to ensure availability of proper equipment or facility for providing transmission of the communication. They have to record the proceedings and prepare the minutes of the meeting. They have to store for safekeeping and marking the tape recordings or other electronic recording mechanism as part of the records of the company, at least before the time of completion of audit of that particular year. So the meeting has to be recorded and kept for safekeeping. They have to ensure that no person other than the concerned director are attending or have access to the meeting. This is also very important. The director or persons who are specifically invited for the meeting, only they have access. This care has to be taken. It is also to be ensured that the participants attending the meeting are able to hear and see the other participants clearly. So the audio and video of all the participants have to remain open throughout the meeting, throughout all the discussions which have been taken at the meeting. The notice of the meeting shall be sent to all the directors in accordance with the provisions. Notice, of course, as per the provisions, as per the articles of association, normally the notice has to be sent, and the notice has also to include the link and various details of the video conferencing and the links, how to log in, all those details have to be mentioned. At the commencement of the meeting, a roll call is to be taken by the chairperson, where every director and special invitee shall state and record his or her name, the location from where he or she is participating, the fact that he has received the agenda and all the other papers relating to the meeting, and that no one, very important, no one other than the concerned director is attending or having access to the proceedings of the meeting at the location which he has stated. So he has to make a affirmation to that effect that no one other than himself or herself is present in the room. Next, after the roll call, the chairperson or the company secretary is to inform the board about the names of persons other than directors and confirm the required quorum. So, which is the special invitees. So, special invitees also have to confirm their attendance. Chairperson has to ensure that the required quorum is present throughout the meeting, throughout the discussion. No other person is to have access to the proceeding at the board meeting without the permission of the board. At the end of the discussion on each agenda item, chairperson shall announce the summary of the decision taken along with the names of directors, if any, who have dissented from the decision taken by the majority. And the minutes also has to state. So a summary, chairman has to summarize the proceeding and also has to summarize the decision along with the names of the dissenting directors. The minutes shall disclose the particulars of directors who attended meetings through video conferencing or other audiovisual means. The draft minutes of the meeting shall be circulated among all the directors within 15 days of the meeting, either in writing or in electronic mode, as may be decided by the board. This was the brief details about the various relaxations, the various amendments which have been notified under the Companies Act by the NCA, and the relaxations which have been provided. Now I will also briefly discuss some filings which are due by 31st of December. Surendra sir has very well covered some of them, like MGT 7, the annual return filings. I'll briefly cover. There are many other forms. The company's fresh start scheme includes many forms. The list of which is included in the MCA site, which can be viewed. However, I felt very important these forms which are there, which are highly relevant for filing by 31st of December. First is the AOC 4, which is about financial statements. So the participants, the chartered accountants might be well aware about all the details about the financial statements. So that is AOC 4, which is to be filed, which should include all the details of the financial statements and the board report. A special care has to be taken where it is in the board report as per section 134(3). The disclosures are specifically mentioned in that section. However, it is sometimes being observed as a very common thing, if I would say a gap which is observed very commonly is in the details of probably the dates of the board meeting, the dates of the committee meeting. They are not properly disclosed. It is observed that those dates are not properly disclosed in the board meeting, in the board report. Also, the directors or the members who attended those meetings, also their names are also not ordinarily there in the board report. What else is that disclosures with respect to, say, for example, the CSR provisions. Now, CSR is not applicable to many companies. There are certain criteria which is to be followed for applicability. However, even if CSR is not applicable, that disclosure has to form a part of the board report, which is also seen as a gap. It is not normally being disclosed. So just to sensitize the participants, I thought of discussing a few provisions. Next is the MGT 7, which is the annual return. Again, the dates of meeting has to be have to be cross-checked. Now, let me give you an example. Say, for example, we file a form which is INC 22 for change in registered office, or any other form for that matter. There is a sentence at the end of the form. I have been authorized by way of resolution number so and so, dated so and so. Now it is observed that in those forms dated so and so, the date of signing that form, respective form, is entered instead of date of meeting at which that director is authorized. That leads to a gap. So that date does not match with the date of the board meeting, which is disclosed in MGT 7. So that also care has to be taken. The dates of the board meeting, the dates of the committee meeting are to be cross-checked and filed with the form MGT 7. DPD 3, of course, particulars for deposits as well as particulars for exempted deposits have to be filed. This is again an annual form. There is a DIR 3 KYC form, which Surendra sir also discussed. This is again the annual form which is required for updating the director's KYC details. Again, there is active form, INC 22A. So companies which have been incorporated before 31st of December 2017 have to file this. So for DIR 3 KYC, any delay is normally liable for a 5,000 rupees penalty. Active form, normal late filing fees rupees 10,000. However, due to CFSS, these late filing fees not being charged, there is the opportunity to file all the overdue forms till 31st of December 2020. Do make use of it. It is highly recommended to conduct a health checkup, a compliance checkup of all the companies, irrespective of whether you think that they are duly compliant or they are non-compliant. It's better to have a health checkup to determine if there is any missing form, then better to file it. For example, ADT 1, ADT 3. This is relating to auditor appointments and change in auditors. Now it is seen that auditor appointment, the form ADT 1 is mostly missed, or at the time of filing of AOC 4, where you need to input the SRN number of ADT 1. At that time, we realized that, oh, ADT 1 was to be filed, and then we rush to file it. So this is again an opportunity. If such forms have not been filed, then do have a health checkup of companies and make use of the scheme. MSME 1. So I'll discuss about this form in some time in my subsequent slides where I deal briefly about MSMEs. Again, INC 20A, which is a declaration of commencement of business, is to be filed on opening of bank account, on transfer of the amount of share capital. This form has to be filed. These are certain relevant important forms which I felt it necessary to discuss in this forum. So this was the part about the various relaxations which have been provided under MCA. Now, next comes is another very important and critical aspect for businesses, which is the MSME Udyam registration. So in this part, I'll briefly cover. So why I have included this in the presentation is that there is a time limit up to 31st of March next year. Up to 31st of March next year, the businesses can get registered under MSME Udyam registration. Businesses, including service sector as well as manufacturing sector, can get registered under MSME Udyam registration, as well as existing MSMEs who have the Udyog Aadhar memorandum or the enterprise memorandum. They can get converted and obtain the Udyog or this Udyam registration by 31st March of next year. In this definition, which you would be aware, was recently amended under the Atmanirbhar Bharat initiative. The investment, this definition is twofold, which is investment criteria as well as the turnover criteria. This definition of micro, small and medium enterprise. So for a micro enterprise, the investment has to be up to 1 crore and turnover has to be up to 5 crore. For a small enterprise, the investment has to be between 1 crore and 10 crore, and turnover has to be between 5 crore and 50 crore. For a medium enterprise, the investment criteria has to be between 10 crore and 50 crore, and turnover criteria has to be from 50 crore to 250 crore. In the announcement which Finance Minister had made, this was 100 crores. This turnover criteria was set at 100 crores for a medium enterprise. However, due to various representation, it was enhanced and was placed at 250 crores, the turnover. All the investment in plant and machinery excludes land and building and furniture and fittings. So only equipment and machinery which has been put into business is included in this definition. Your investment and turnover criteria would be linked with income tax return as well as the goods and services tax returns which are filed. So for companies which have not be for companies as well as entities which don't have an income tax PAN or a GST registration, for those currently you can obtain the MSME registration on a self-declaration basis, and thereafter on or before 31st March of next year, you have to mandatorily obtain your GST registration as well as your PAN. GST registration irrespective of the normal turnover criteria under the GST laws. If you want to register as under the Udyam registration, then GST would be required. The data of investment and turnover would be automatically fetched from their respective IT and the GST portal. So that is why the details of IT and GST would be required. Now, entities include many things. So, for example, if I would say the entities would include many. For example, there is a definition of person. Likewise, there is either a sole proprietor or a Hindu undivided family. It can be a partnership firm or a limited liability partnership. Can be a cooperative society. Can be a company, whether a public or a private or a one-person company. It can be a trust. So, the authorized person on behalf of all these, which would be for a sole proprietor, it would be a proprietor himself or herself. For a HUF, it would be a Karta. For a firm, it would be the partner or the designated partner. For a cooperative society, there would be a member. For a company, there would be the authorized person. For a trust, it would be a trustee. So all these authorized person can obtain the Udyam registration on basis of their Aadhaar number, respective individual Aadhaar number. You can obtain the Udyam registration. As I have already mentioned, this is newly introduced with effect from July 2020. Mandatorily, all MSMEs with this criteria, which is there. So if it's a it's a huge definition. Basically, turnover up to 250 crore would cover a large base, and this turnover also exclude exports. Why does it exclude? Because the government and ministry wishes to promote further the businesses in exporting. That is why it excludes exports. So you can imagine the kind of entities which would be covered. It would now, this definition would cover almost 99% of all the business entities which are registered in India. So this is why this is very important. It is completely paperless and free of cost. All existing registrations can have to mandatorily migrate to the new Udyam portal by 31st March of next year. The details which would be required would be Aadhaar number, which is there of this authorized person, the PAN and GST number of the entity, the details which would be like registered address, the category, the type of person, the category of the entity, the bank details of the entity, activity code would have to be input, employees registered with the entity, all details have to be put. Investment and turnover would be automatically fetched from ITR or GST website, else they would be on self-declaration if not available. And till next year, by 31st of March, the entity has to mandatorily obtain PAN or GST. This MSME Samadhan. So regarding form MSME 1, which I told, this is the provisions of the MSMED Act. In section 15 and section 16, it is mentioned that if a MSME has any dues to a supplier, so any entity has any dues to a MSME supplier exceeding 45 days, then this is provided, MSME Samadhan is provided. So all dues to a MSME supplier has to be cleared within 45 days from the date of acceptance of the goods or services. 45 days from acceptance and not from the date of invoice or purchase order. Be careful of this. So any dues to a MSME supplier has to be cleared within 45 days from the date of acceptance of goods or services. If it is not cleared, then under MSME Samadhan, the entity can make a representation before on the portal along with copies of their invoices as well as purchase orders. MSME Samadhan will then make representation to a MSE Facilitation Center, which would be required to resolve all such dispute within 3 months time. So from the within 3 months from such application, all such disputes have to be resolved by the MSE Facilitation Center. If the payments have not been made to the MSME suppliers within 45 days of acceptance, then it is liable to interest at the rate 3 times the bank rate. The compound interest is to be levied at 3 times the bank applicable rate, which is why this and as a means to have this provision enforced, the MCA had included form MSME 1, which is a 6-monthly form, half-yearly form, for wherein companies are required to include in this all the dues which are due exceeding 45 days to the MSME suppliers, including the details, the PAN number, and the reasons why it has not been paid within 45 days. So this form MSME 1 is a half-yearly form by which these provisions of the MSMED Act in section 15 and 16 are being enforced for the companies in India. So this was about the MSME Samadhan, but there would be cases where, I mean, the business entities would not be willing to take on, would not be willing to file such an application. They would be saying that, okay, then my business would get impacted, or my relations, the trade relations would get impacted. In such a case, there is this trades receivable portal, which is a mechanism is set for facilitating the trade receivable financing of MSMEs. So all the receivables of the MSMEs can now be discounted. The receivables and the bills can be discounted on this trades portal. MI Exchange, which is the first such trades portal which has been set up by the RBI in 2014 for this purpose, wherein every MSME can upload their invoice, their receivables on the site, and then the financiers can auction for this. So it is like a mechanism of this bills discounting mechanism, and there is without any recourse back to the MSME. So once this is discounted and this transaction is done, there is no recourse back to the MSME. So for a MSME, the benefit is that their receivable is discounted and the liquidity gets free right now without any recourse back to the MSME in future. IPR also, for if an entity is registered as a MSME, there are benefits for a IPR, which wherein the expenses with respect to patents are reimbursed, for foreign patents are also reimbursed, to geographical indications are also reimbursed. Even for trademark, there are certain this reliefs as well as reimbursement which are possible. Government also undertakes various activities to raise awareness about IPRs for the MSMEs. This is a key marketplace which is for MSMEs. They can automatically register based on their Udyog Aadhaar and Udyam certificate. This is a portal wherein MSMEs can get access to over 43,000 buyer organizations without any middleman. It is completely paperless and cashless registration. There is a timely payment. So all process is done on the government e-marketplace, which is the GEM portal. Without there is no concern about payments or delivery or acceptances. Everything is managed on the GEM portal, which is also another benefit which is available for MSMEs. And there is a dynamic pricing mechanism based on the market conditions. The micro and small enterprises can charge their prices. There is also freedom from individual product registration. As I said, the registration can be obtained based on the Udyog Aadhaar number or the Udyam registration. This is again for GTE. So this is the tender inquiry, again an announcement under the Atmanirbhar Bharat initiative, wherein tenders up to rupees 200 crores. For such tenders, no foreign tenders or foreign bidding would be invited. So this would give a huge opportunity for Indian registered businesses and MSMEs to bid for such tenders. This is a scheme for promoters, again, as a part of the Atmanirbhar Bharat initiative to support the promoters of the stressed but operational MSMEs as on 30th of April. So as on 30th of April, such stressed and NPA, which have been declared as NPA, but they are operational. So in this case, promoters would be given certain benefits, certain credit, and which the promoters can then input into the MSME as quasi-equity or as a equity, and can get some much needed relief. There is a moratorium of 7 years on repayment of principal. Only interest is charged on for this period, and maximum tenure of such a credit would be up to 10 years. This is also another emergency working capital facility for MSMEs, wherein under recent announcement, this applicability was enhanced from 31st of October to 31st of March of next year. This is the additional working capital which would be granted to up to 20% of the outstanding credit as on 29th of February 2020. Eligibility of units were also prescribed. Units up to 50 crore of outstanding borrowings, as well as turnover up to 250 crore, and up to 60 days past due as on 29th of February 2020 would be eligible for this additional working capital 20% finance. It would be 100% guaranteed by the government. There is also a 12-month moratorium on the repayment of principal and also the interest is capped. And the benefit of this scheme can be availed till 31st of March 2021. This is another interesting amendment for MSMEs, which was introduced with effect from June of this year. As it is a new portal, I found it interesting to include under this presentation. This is a new portal for MSMEs, wherein all the information relating to MSMEs are available on this MSME Champions portal. All the circulars, all the schemes, all the benefits, registrations, all details are available, including for grievance as well. So all grievances also now can be now solved under the MSME Champions portal. It is a technology-driven platform for helping and promoting the MSMEs. It is a web-based portal for providing facilities to MSME and the stakeholders. As I said, it is a single platform for all grievance redressal, and including existing grievances also would be covered under this MSME Champions portal. It contains all relevant information about the MSMEs. Now, focus areas, as I said, for grievances, a unique ID would be generated. There would also, the grievances on existing portals, CP grants and other MSME portals would also be taken on MSME Champions. Portals would also encourage capture ideas from experts and technocrats who would be there to resolve all the grievances. They would be given a unique ID. There would also be administrative staff and administrative interventions by the functionaries of ministries for relevant grievances, and there would also be VIP references from ministers and dignitaries. So all type of grievances can be now resolved on MSME Champions portal. All issues would be bundled together and segregated subject-wise. Matters would not remain unattended for more than 3 days and inconclusive after 7 days. So it is highly time-bound, and matters now, grievances would be resolved. These are some websites for ready reference. As I said, MSME Champions. So this is the first is the link for Champions portal. Then is the Udyam registration. So this is the only link for Udyam registration. All other links are fake. This is udyamregistration.gov.in is the only authentic site for obtaining Udyam registration, and it is completely free of cost. No entity or agency or institution can charge any fee, any money for obtaining Udyam registration. Care to be taken. MSME for MSME Samadhan for raising grievances. This is the link. For a government e-marketplace also, I have given the link. For Trades portal, the M1 exchange, which is the first platform launched by the RBI, this is the link. And also for MSMEs who are registered as companies, as private limited companies, having innovative ideas up to 10 years from the date of incorporation, they can also register as a startup. The details are mentioned on this site, which can be referred for ready reference. I would like to end this my presentation by these two small quotes. A small business is an amazing way to serve and leave an impact on the world that you live in. This is by Nicole Snow. And failure is not to be feared. It is from failure that most growth comes. So it is a call to all entrepreneurs, all service providers and businesses. Get registered. Don't be feared of failure. Get registered as businesses. Let's become Atmanirbhar, which is the call of the government. Thank you very much for the opportunity. Thank you.
Thank you, Surendra sir and Raj, for your wonderful presentation. Now I'm starting with a question. There are quite a few. Let me start one by one. Let me take up one by one.
Sir, before we start with the questions, there was some which was circulated on Google Forms. So
Yes.
If with your permission, I can share the same as well, and we can discuss that first.
Please, that would be great.
So this is these were the questions. So with permission of the conveners and Surendra sir as well, we can discuss these questions. So first question was by CA Mahesh Dave. Mobile OTP is not getting for foreign directors for eKYC since last 6 months. We have raised many tickets without any solution. It gets closed. In the past, same mobile they were received, email OTP received. 31st December is the last date. How to resolve? Actually, this is a technical issue at the MCA. We are also facing the same. We hope that it is now resolved. Just today, the site was down for maintenance. So I hope that now we have some resolution for that. Next is by CA Hitesh Ji. It has been almost 2 months. I have filed Form 24 LLP for striking off, and still approval is pending from ROC. So this approval, it is not a straight-through form. It is subject to ROC approval, and considering the pandemic situation, they are also limited staff. So this is again a common issue, and we would have to follow up with the ROC for obtaining the approval. Or if there are any queries, then they can raise the same on the email. Next is CA Subhash Ji. There is no query, I think. CA Suresh Nagaral Ji. In case of amendment in memorandum or articles, how to attach the amended MOA and AOA. So now, currently the process is that for all memorandum and articles during incorporation, there is a SPICE form which has to be attached as a linked form. But in case of there is any amendment, the scanned MOA and AOA certified, mentioning the details of what has been amended, by which meeting, which date, all details have to be mentioned in that scanned MOA and AOA, and then it has to be attached with the relevant form. The SPICE forms are not to be used for any amendment. Where any more extension given for annual return and form filing for LLP, which is normally within 30 days of due date. So this we discussed in my presentation, where I discussed about the LLP settlement scheme. All the documents which are due for filing till 31st of November 2020 can now be filed without any penalty or late fee. Time is there till 31st of December. The same can be made use of. Is it mandatory for Section 8 company to appoint and reappoint auditors for 5 years, or 1 year is also permissible? So Section 139(1) requires all companies to appoint auditors for 5 years. So there is no exemption. So now it is mandatory to appoint auditors for a period of 5 years. According to CFSS, the CFSS form should be filed within 6 months of filing related document, but the form CFSS is not yet deployed. So as Surendra sir discussed about it, after the closure of scheme, it has to be filed within 6 months. So hopefully, if there is no further extension, then the form should be made available on the MCA site after 31st of December, and the same can be filed before 30th of June. Next is a kind of a specific query, wherein this CA Devangji has has given detail of a company which has not filed from 2012 their annual filings. So this being a specific query, you can get in touch with us on email. We would be happy to resolve. However, it has to be seen in this case whether the company is still active or whether it is struck off by the ROC, considering that filings have not been made since 2012. Even so, in that case, we would have to revive the company. The disqualified directors are there, so new directors would have to be appointed, and then the company can make use of this scheme. So Devang Bhai can get in touch with us on the email, and we would be happy to resolve this specific query. ROC is telling they are facelessly dealing. Why is it taking long time for approval in case of increasing authorized capital? If we call customer care, routine answer is that there is long pending matters. So this is a common query again, which has been faced by all the stakeholders. So we can hope for better days ahead, actually. So these were the queries which were shared with us. So over to you, Lalit Bhai.
Yes, and I think there was one query related to mobile OTP by Mr. Mahesh Dave. Mr. Arvind Soni in the chat box has replied saying that okay, you have to provide a foreign country number for NRI directors. That's what he has answered for the benefit of the members.
Yes.
Okay, and
Yes.
now let me go to the queries. The one which is we received in the email, I'll start with that one. It says kindly address the following queries. First, do we need to file nil DPT3?
Surendra sir would like to take, or I will take. Nil is not required to be filed basically.
Surendra sir, you are on mute. Yes.
Yeah, there is no need to file nil DPT.
No need to file.
In fact, in the earlier era, there was a clarification also from the Ministry of Corporate Affairs that there was no need to file the return of deposit if there were no deposits. Zero return is not to be filed.
Yes. Second question in that is any chances of extension for the amnesty scheme, that is CFSS?
We can hope for the same. We
Same,
don't. We
yes.
can say that.
And the last one, and that is auditor certificate compulsory in DPT3?
Internally,
Not for exempted.
No, but internally it seems there is a opinion in the ROC's office that if the exempt deposits or deposits are beyond a threshold, rather exempt deposits beyond a specific threshold, they ask for the certificate.
Okay.
Yes.
So let me.
And I think CA Institute has come out with a draft format also for the certificate to be given in case it is asked for. So they can ask for wherever they feel that the amount is beyond a specified threshold. It's like.
Now next question is whether AOC 4 for financial 18-19 can be filed under the scheme. I think this answer is already given.
Yes.
Yes. Next is whether payment of salary to employees to maintain registered office is significant accounting transaction or not.
There is a concept of materiality in accounting system.
Yes.
So that has to be applied. It's like, I mean, reasonable. No, what is reasonable again is to be decided by.
It depends on case to case.
Yes.
It cannot be saying lakhs of rupees and all. Obviously, no.
Okay. The next question is: can ADT 1 belated file now if previously not filed?
Yes, it can be done. It's being accepted by the system.
Under the scheme.
Yes. Next is how to surrender DIN if director is no more a director. I mean, he has left his position as a director.
You cannot surrender. If you were director in any company, even for a day under the DIN, you are not allowed to surrender as of now.
Okay.
If you have taken a DIN and you were not director in any company till date, then you are allowed to surrender. Otherwise, you are not allowed to surrender. No.
Okay.
It's not possible. As of now, it's not possible.
Okay. Next is form CFS required to be filed for all forms including direct DIR3 KYC. Also, if we file forms currently without additional fees, but we miss filing form CFSS to submit SRN, what can be consequences?
For KYC, obviously, there is no need to file immunity cell because there is no sin and therefore there is no form which is to be filed. And forms which are being filed with normal fee, there is no need to go for any immunity.
Okay.
Only wherever
For belated forms. So if CFSS is not filed, then immunity will not be granted. So then the ROC can take some action. That is.
in
Yes.
fact, I don't think it would be a very serious lapse. I mean, if there are just 1 or 2 forms and CFSS 2020 is not filed, nothing great would happen. But yes, if there were no long number of forms and there were other side effects, in that case, filing is to be. And since there is no filing fee, it's advisable that the form be filed.
Okay, sir. The next one is, if a company had last AGM on 30th of September 2019, then the last date of AGM for 2020 would be 29 December 19, considering 50 months gap. Kindly confirm.
There are different viewpoints. I feel it should be 29th December. I mean, others may have different.
Okay, because
it all depends on.
In the example given by Raj, it was said as 31st December.
No, again, at times what there are people who feels, and rightly so, that the date of event is to be ignored while making the calculation.
Okay.
If you follow that funda, in that case, what Rajesh said is correct, because and 30th September, well, but I think we should not again take advantage to the last possible day where there is an ambiguity. It's better to keep it 27th December.
Yeah, 1 or 2 days before, that is better.
Agreed. Next is, the company's accounts are anticipated not to be ready and audited before 15th January 2021. What is possible course of action here without any penalties?
You have to hold an AGM every calendar year.
Okay.
Somewhere it's so, and ROC has no power to go beyond 3 months from the. So I don't think they will have to file belated accounts and then go for adjudication or compounding, whatever is applicable.
Specific, so compounding would be.
Raj may have a different view. I don't have too much experience of this kind, but I think technically ROC cannot go beyond 3 months. And that's why if you see all the ROCs have issued identical circulars,
yes,
the same language, 3 months, because they can't go beyond that.
Yes. Okay. Next question is, a company's that has been done. Next is, in the annual return form, what is the mention as the due date for AGM? Is it the date as per 15 months extension? The form asked for ROC approval to be attached. I don't know. The question is half or something like that.
No. I would like to be guided by Raj on this issue. But your second part, if we attach ROC extension letter, they ask for SRN. They are stuck. So I would like to be guided by Raj if he has what should be done. In fact, this is my query also.
So ideally, precisely for this reason, what is the thing is that there is no question of SRN because GNL1 has not been filed. Without any GNL1, the circular itself mentions that it is a 3 months extension which has been provided. So then the due date should be accordingly mentioned and calculated as per the example and as applicable from case to case, and that due date should be mentioned there.
No, but
extension.
Problem, Raj, in MGT 7 they ask for SRN. In AOC 4 they don't ask.
AOC 4 also they are asking SRN for GNL1. They are asking in that as well. That is the thing. So that is the problem.
So one way out which we thought can be that the due date be shown as
extended itself.
And you don't say that we have asked for extension.
We have asked for extension. That is because that is a general extension which has been provided regardless of GNL1. It is mentioned in the circular itself. So then accordingly you can.
So it's automatically extension given by the regulator, kind of.
Next one is, if any company wants to know all his pending documents filing compliance as on date, where to get the same from MCA site?
It's available. View public documents.
Public documents.
Yes, that's good. Next is, in the case of LLP for filing accounts of F financial year 20, what is the last date by which those should be signed? Is it 30th November 20? Can it be signed as on today also?
In fact, I was struggling to get the circular, and on the other laptop I located this. The date is 30th November 2020.
Okay.
Circular number is 37/2020. where there is a specific paragraph I will read. If a statement of account and solvency for the financial year 1920 has been signed beyond the period of 6 months from the end of financial year, but not later than 30th November 2020, the same shall be deemed as non-compliant. So 30th November can be taken as a.
Okay, great, sir, great. Next one is, it means for 100% export turnover company, no Udyam number as export turnover is excluded from turnover limit, or it can be considered as micro. The question is related to MSME.
Raj.
Export turnover companies, no Udyam number as export turnover.
So you mean to say only export turnover company can they go for the MSME registration?
Yes, they can go. There is like up to it is mentioned. So of course they can be registered as micro.
Okay.
Even 100% export turnover. That is the benefit, that if you have hardly any domestic sales but then fully export, then that benefit is there. Yes.
Next is in case of MSME dues, how does one determine 45 days from acceptance of goods or services? That is, how to evidence acceptance of goods or services in order to prove the buyer at fault.
So there are many ways, like delivery challan is there, that you have received that, or countersign, or you can send on email that yes, we have received. In case of acceptance of service as well, that engagement communication is good enough. So all those things are there. There are many means by which you can determine, but the crucial is date of acceptance and not invoice or date of PO.
Next is, on a practical basis, due to slowdown and lack of orders, it is seen that supplier and customers agree to a longer credit period of say 4 months to 6 months. Although this is not in spirit of MSME law, can such a reason be mentioned in MSME for delay in payment?
Whatever is the reason, you can mention. Currently, there is no action which has been taken for such a delay, but then ROCs may go for some adjudication. That depends at a later stage. But you need to mention some reason that as per the dealing. But again, such a 4 to 6 months of a credit period is not in accordance with the MSMED Act, which provides for a 45-day. If there is anything beyond 45 days, then pay interest at the rate of 3 times, which is at the bank notified rate. So that has to be kept in mind. Yes.
The next question is in 2 parts. A person is basically a retail trader but does not offer some services, consulting about 2% of turnover, constituting about 2% of turnover. Can he get registered under MSME? And in the above case, the services rendered are testing facilities which are also outsourced. Will they make any difference? Will that make any difference?
For services, the person can be registered. Only a trader cannot be registered. As a trader or offering solely trading of this, it is not allowed to be registered as. Otherwise, for service part, you
service
can
provider can, yes. Next is forms for strike-off uploaded 2 months back, but still no response from department, no response of ticket raised. What to do?
That is the general repeated here.
Okay. Next is nil MSME form mandatory to be filed?
No.
Nil is not.
Nil is not
required. Yes. Next is bigger one. We are applying for formation of new private limited company through Spice Plus form. The company is incorporated, but we are facing difficulties in getting the GST registration number, which was applied through Agile form. Also, we have the PTEC and PTRC registration number, but we have not received the email for registration, neither have received the user ID and password. Please guide how to resolve the above. Is it coming under the ROC?
In Agile form, it's automatic.
Yes, okay.
Ticket can be raised.
Ticket can be raised and follow.
Okay. So is the physical follow-up possible at ROC?
No, because it is handled at the CRC level, which is, the ROCs also will not be able to do anything. It is at the CRC level.
Okay. Next, is it mandatory to adopt financials in AGM? Can we hold AGM and not adopt financials? Or can we publish unaudited financials and then again conduct one more AGM to adopt audited financials?
It needs to be done within that prescribed period. Everything has to be done within that.
Yes.
adjournment of AGM also has to be done within the specified period. I mean, non-availability of accounts cannot be used as an excuse to extend the duration of. We have very old judgment of Calcutta High Court, Vijay Kumar Karnani case, I think, decades back.
But sir, in 2000, the 1956 Act, I think there was a possibility that you can hold AGM without financials also.
Again, nahi. After this Vijay Kumar Karnani case, there was a clarification and it had to be again done within that duration of 6 months and 15 months gap.
Okay, great.
Beyond that, it was not allowed.
Next is it necessary for an OPC to file MBP 1 or DIR 8 every year? 1% company?
No idea. MBP 1?
It is for directors. So, I mean, you need to, it's like for interested directors, interest in other entities. So it is to be taken as per.
But MBP 1 is a communication between the director and the
company.
OPC.
The OPC, but filing is not there, but it is the internal thing which is a part of governance.
I think it should be done because
it should be, yeah, that's what I was saying.
Party concept may crop up.
Next one is company was incorporated on 10th of March 2020 due to COVID-19. There is no business or compliance by the management. So can we file ROC returns directly for March 21 since time limit for holding first AGM is 15 months?
Yes.
I think they can, yes. Yes. The last question is, what is the last date to sign the balance sheet of a company if the AGM is to be held on 31st December 2020?
31st December, will it be because if 30th September, 3 months, well,
okay, if you consider 20th December,
you are convening AGM at a shorter notice.
Yes.
Shorter notice can be done
even on 30th.
Even on same day, but subject to.
If you have consent from all the members and all, it's
absolutely.
Depending on the, I mean, if you have large number of shareholders, again, getting consent would be tough.
Yes. Thank you so much to both of you, Surendra sir, Raj, for your wonderful presentation and handling the queries so well. May I request my core committee colleague Sikandar Yadav to propose well-deserved vote of thanks to both the learned speakers.
Thank you, Lalit bhai. It is a great privilege and honor to propose well-deserved vote of thanks to both the learned speaker, CS Surendra Kanstia sir and CS Raj Kapadia. As it is said, great things in business are never done by one person. They are done by a team of good people. Today's session was like a relay. Both the learned speakers explained the various provisions with the beautiful PPT. They have explained applicability of the scheme, explained section 455 of inactive company immunity certificates. Also, they have taken the frequently asked questions. They have covered section 403, explained LLP settlement scheme 2020, relevant recent amendments, audio visual board meetings, MSME Udyam registration and compliances, MSME Samadhan, government e-marketplace. I, on behalf of Borli Central CP Study Circle, request all the present members for a loud virtual applause. Thank you, sir.
Thank you, sir. Thank you so much, Surendra sir. Thank you, Raj.
Thank you.
Thank you so much. We are ending the meeting over here.